We have what is being called an extreme fear buy signal showing up on XRP. In today's update, I want to talk about the most recent draft from the Senate Agricultural Committee on our digital asset market structure bill and Clarity Act that we are waiting for. We just got the text last night, and I got a brief summary that we're going to run through. It'll highlight the key points that you need to know. And then we're going to take a look here at XRP and an extreme fear buy signal that has arrived. And we're talking about public sentiment being not so good versus the upside opportunity on the asset and the rally that can be expected here shortly right around the corner. So if you appreciate what we're doing, please help us out by liking these videos, sharing them out far and wide, and all of our community resources are available at ZachRector.com. Now, as a reminder, guys, I'm heading up to Vancouver this weekend for the Vancouver Resource Investment Conference. So if you are going to be attending, I highly recommend you do. If you're in the area, it is free, absolutely free to attend. And we'd love to have you stop by our booth. We'll be recording interviews up there and providing coverage from the conference Sunday and Monday. And then we have a private meetup for our community on Saturday. Looking forward to it. So without further ado, let's get into the update. We'll be back live tonight at 10 p.m. Eastern for our regular Thursday live show. We'll see you then. Now, Q3 GDP second reading coming in at 4.4%, above expectations of 4.3. Previously, we were at 3.8. This is the highest GDP reading in 2 years. And so another sign that our economy is growing, it is expanding. Inflation's not going away, right? But we got a clear mandate from President Trump, his administration, and that is focus on growth. Treasury Secretary Bessent, we're focusing on growth and expansion, and at the same time working on cutting somewhat as well. But mostly, it's going to be deregulation, lowering taxes, and growth. And that's the transfer of wealth that we want to get on the right side of. And what we're waiting for, too, here is the Fed to catch up. The Fed's been playing hardball. They've been working against the American people. We have a new Fed chair that'll be coming in May. And so in the meantime, are we going to get another rate cut? Right now, the expectation is 1 to 2 rate cuts this year for another 25 to 50 basis point lower on that interest rate. But when that comes, and maybe we even get more than that, right? We could see a catalyst, come about that brings in sort of a panic moment, problem reaction solution to where they can bring those rates down even further, where they would really spur growth and really spur asset appreciation. And we're already seeing that with gold and silver, stock market at all-time high. Crypto had a decent run last year but fell short. But we're expecting that to open and broaden out here this year as the Russell 2000 extends up to new all-time highs and we get a little bit more breadth in our markets. It's not just going to be Bitcoin topping out and XRP topping out. It's not just going to be the S&P 500 led by the Magnificent Seven topping out, but that liquidity cycle will bring about a expanded and broadening business cycle, and this always correlates with an alt season for your favorite cryptos or maybe some of those crap coin meme coins that you're looking to dump. Maybe you'll get an opportunity. I don't know. I got a couple of those in my bag as well. But speaking of the coins and the digital assets, we got the Senate Agricultural Committee released their text last night on their version of the crypto market structure bill. So this bill is called the Digital Commodity Intermediaries Act. And I like this approach. It's specifically going after the intermediaries that are doing certain activities that actually should be regulated by the CFTC, right? And that's where this focus is at. So Bill Hughes right here, he's a lawyer at Consensus, formerly the Department of Justice and White House, and Sullivan and Cromwell. He provides a very good summary right here. Senate Ag just dropped their new draft of a market structure bill. Here is a summary of what the Digital Commodity Intermediaries Act does specifically on self-custody wallets and DeFi non-custodial interfaces. 1. Self-custody wallets are explicitly not regulated. This is a big one. Huge win for crypto and self-custody. The DCIA is careful to regulate intermediaries, not users or software. We love it. What it says in substance, the bill limits CFTC jurisdiction to digital commodity intermediaries, defined as entities that take custody of customers' assets, accept or transmit customer orders, execute or clear transactions, hold margin collateral or funds, act as agents or counterparties in a self-custody wallet that merely stores private keys, signs transactions locally, and broadcasts user-authorized transactions does not meet the definition of an intermediary and is therefore outside the act. So your self-custody, hot wallets, cold wallets, absolutely good to go and are not under the jurisdiction and do not meet the definition of an intermediary in this act, in this bill. That's a fantastic win if we can get this one across the finish line. Of course, this is just a text draft. Okay. Now, practical effect, no registration, no KYC, AML, no reporting, no supervision of cold wallets. Pure self-custody wallets are untouched. The bill assumes self-custody is a user activity, not a regulated service. Now, this is the America that I was born in and grew to love so much. This is what I'm talking about right here. We love it. Non-custodial DeFi interfaces are generally protected. We like this too. The DCIA does not regulate DeFi interfaces just because they facilitate trading. Regulation turns on whether the interface operator has custody of assets or has discretion or control over execution. If a DeFi interface lets users submit transactions directly using smart contracts, does not hold funds, does not route, batch, or execute orders on users' behalf, cannot stop, reverse, or prioritize transactions, then it is not a digital commodity intermediary. That covers DEX front ends, aggregators, wallet-embedded swap UIs, non-custodial bridges, and protocol dashboards. So think of user interfaces. On the XRP ledger, we're talking about XMagnetic, XP Market, Anados Finance. These are DEX interfaces that allow you to control, right, your XRP wallet, your XRP funds, and XRP tokens on the XRP ledger. And they're just an interface that allows you to do so. They're not an intermediary under this definition. So those would all be in the clear. Zomin wallet, the self-custody is protected, and the ability to swap on your Zomin wallet, add to the AMM, take from the AMM, that's all covered. That's all good to go. And this would apply to other, blockchains and ledgers and similar DeFi interfaces and DEX front ends and aggregators as well. The CFTC has explicitly denied authority to regulate mere software publishers. We love it. Protect our builders, right? We want innovation. Let our entrepreneurs and capitalists build. Come on. Where DeFi interfaces do become regulated, the act is very clear that decentralization and name does not matter. Control does. A DeFi interface is regulated if the operator takes custody, even briefly, executes trades on behalf of users, matches orders, controls routing logic, acts as a counterparty, maintains margin or collateral, can halt or override transactions. At that point, the interface becomes a digital commodity intermediary and must register with the CFTC, comply with AML customer protection rules, meet capital and record keeping requirements. So this captures custodial DeFi platforms, CeFi platforms using on-chain settlement, managed trading interfaces, and admin-controlled bridge. So I'm just going to, for example, right, a platform like Doppler Finance, which calls itself CDeFi, right? It's a little bit of DeFi, but it's pretty much centralized. You give them control of your XRP, and they're going to go trade it to generate you yield, right? Doppler Finance right now is not available in the United States, and they're probably waiting for this type of Market Structure Clarity Act to pass, and then they'll be able to come in, register with the CFTC, right? Go through this process, they'll be good to go, right? So the platforms like that are taking custody of your crypto, that are going to go trade on your behalf, right? That's an intermediary that is going to fall under this definition and will be regulated by the CFTC. I love this. Absolutely love this. And I'm sure platforms like Doppler and others, I don't want to speak for them, but this is the clarity that we've been waiting for, so that these providers that are bringing yield to the XRP community can do so in the United States of America. Love this. Absolutely love this. No backdoor regulation of wallets or user interfaces. Importantly, the bill does not authorize the CFTC to redefine wallets as intermediaries, impose obligations on users, require wallet KYC. So this protects privacy as well. Require interface licensing just for access. In sum, the Digital Commodity Intermediaries Act does not regulate self-custody wallets, does not regulate non-custodial DeFi interfaces, regulates any platform that takes custody or controls execution, and focuses squarely on intermediaries, not protocols or users. TLDR, if you don't touch the money and you don't control the trade, you're not regulated. Self-custody wallets, cold storage wallets, hot wallets that are self-custody, absolutely in the clear. DeFi interfaces that don't don't take custody, don't manage the trades or execute, all good to go. All good to go. This is the type of bill that we've been waiting for, that boldens our developers, our innovators, our capitalists in this country. And this is the type of bill that allows us to become the crypto capital of the world. I am absolutely in love with what I'm seeing in this text. Now, I haven't read the full bill, so don't hold me to if there's a line buried somewhere that's not good. But just knowing who drafted this bill, knowing the intent and the main objectives and purposes and definitions that were defined here, absolutely love it. This is how we become the crypto capital of the world. Now, let's get into this with XRP and the extreme fear buying signal that we just got. Okay. Now, what we're looking at here is sentiment. Sentiment tracks social media engagement, tracks the sentiment in the marketplace. And what we always see is that when retail sentiment is terrible, it's bad, it's negative, that's typically a buy signal. When it's time to enter into the trade, enter in and pick up your assets before they go on another rally. When the sentiment is all positive to the moon, we're having a party, that's when it's time to take some profit or de-risk. Now, I'm not here to give you financial advice. I'm just telling you how these markets work and what sentiment tracks. Okay? And so we're looking right here. Let's take a look. I'm going to zoom in on this chart right there so you guys can see this. And they show the yellow line is the positive and negative sentiment for XRP. The chart obviously is the price of XRP. And so while we're below this green line, sentiment above this line equals fear zone, prices go up. I think they meant to say below this line, right? Because when it goes below this line, that's when the buy signal is coming in. Sentiment near this line, the neutral zone, prices are unpredictable. But when sentiment's above the red line or the greed zone, prices go down, okay? So what we saw January 2nd, XRP gets a buy signal as the sentiment absolutely tanks, right? And that was the start of this year, right before we went on that massive rally to start off the year all the way up to 240. And then that's when we were above in the greed zone. And on January 7th, XRP gets the sell signal because the sentiment spikes back up above the greed zone, right? And so that's when we get a correction, market pulls back. We get another sell signal on January 11th, right? Despite XRP had already started coming back down, sentiment was still climbing. January 13th, the sentiment's still climbing. We get another little, rally back up to 220. And this is when I had thought that XRP was on its way to doing a double top up at 240 or at least going to 227. And, Supreme Court delayed their ruling on Trump tariffs. Clarity Act markup vote got delayed by Senate Banking and Senate Ag. And then the market rolled back over. Now, on January 18th, just 4 days ago, we got the buy signal as the sentiment went back down here into the fear zone. And then yesterday into today, the sentiments dropped even lower, giving us an even stronger buy signal. Now, once again, I'm not here to tell you what to do. I just share what I do. And yesterday, I did buy the dip. I did load up, and I added big time to my XRP position at $1.88, and I let the Discord group know about that. If you guys want to stay up to date with all of my moves in real time, we talk about that along with all of our other resources there in the Discord community. You sign up through Patreon to get access to Discord. But here's a look at the chart on XRP. We did get a strong bounce back up to about $1.98 yesterday. Once again, I picked up at $1.88 down here. We got a strong rally, and then we're coming back here, but we're setting a higher low once again. So we look at these touch points, higher lows coming in, $1.91 on XRP. What did we touch this morning? $1.90. So we're starting to build some support. And then just based off of what we're seeing right here, we have entered extreme fear, and it is giving us a buy signal. Absolutely. Now, if you're looking for a platform to buy or trade cryptocurrencies and precious metals in your retirement account, iTrust Capital does have you covered. Check out our sponsor, folks. iTrust Capital, incredible platform for getting access to crypto and precious metals. You can set up an IRA or roll over an existing 401k into their platform. They'll help you set it up. They make it easy. And if you look at these fees, it's incredible. $0 on the monthly annual fees. There's no AUM fees when you use their institutional grade custody. 1% on the transaction fee, 125 over spot for the gold transaction fee, and 395 over spot for silver transaction fee. And then they also have the premium custody account as well. I am sick of hearing, so many stories that have come across my desk. It's sickening, of people that have lost, got scammed in crypto. The premium custody account from iTrust Capital will secure your crypto in their closed loop system. Your crypto can't leave. The only way to get anything to leave that account is for dollars to be sent to your bank account. So it completely secures your funds and your crypto. Check it out, iTrust Capital. Use my link down below to get the $100 funding bonus. And come on back tonight, 10 p.m. Eastern, for a full market update and Q&A session. We look forward to seeing you there. And if you're wondering, yes, I am wearing XRP, the better Bitcoin. They love this shirt. On the front, you just get the big XRP patch. And then on the back is where we got the big X, and it says XRP, the better Bitcoin. Let folks know. Yeah, that's all available at our website too, ZachRector.com. All of the XRP merch and hats with some new stuff on the way too. Stay tuned for that. God bless you all. Thank you so much. We'll see you. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.